JB here. Friday, August 2nd, 2024, 8:55 on this fine recession Friday. Sense my sarcasm. I'm sure that's going to be the big narrative over the weekend. You had that ISM number on yesterday at 10 o'clock showing contraction. And then we have the jobs number for July coming in. Well, the unemployment rate ticked up 0.2%, and then the amount of jobs created missed estimates by about 60,000, over 30% lower than estimates. So now we have this concern that, hey, oh my gosh, the Fed did not cut rates soon enough. I think that's going to be, you're going to hear that all on the financial networks, the headlines. The Fed they're going to need to cut rates 0.5% going into September. So now the spotlight will be on Jackson Hole in 3 weeks. And that's where we have Fed Chair Powell is going to probably paint the picture for, or at least give a description of what's going to happen for the rest of the year. And you start looking at the Fed watch, and it looks like 4 rate cuts are being priced in now, which is pretty remarkable, considering where we were at, where some were saying a couple of weeks ago only 2 cuts. I remember it was like a month or two ago, no cuts whatsoever in 2024, and now we're back to 4 rate cuts. And if you're around last summer or even in the fall of last year, yes, the CME Fed Watch tool showed 4 rate cuts by the summer of this year. So we haven't even had any. So it's kind of funny, comical. It's almost impressive that the market's been able to rally in face of all this uncertainty around the Fed. But now I think this data is going to, I mean, it's certainly point 100% to at least a rate cut in September, and now the possibility of half a percentage cut in September is on the table, and it's all going to be about some of the data that's going to come out over the next couple of weeks, and then we'll see what Fed Chair Powell says. But just disappointing. The market was holding its ground from 9:30 to 10. That data came out, and then it was just a slow and steady, meticulous sell-off to the late afternoon before we got a late session bounce to close back over the 50-day on the SPY. And right now, futures are just not nice, right? The small caps are down nearly 4%. Small cap futures, Nasdaq futures down 2.25%, and the S&P futures down 1.5%. I always say I kind of I prefer red opens and reversals. So I'm just hoping at some point we get some kind of a playable reversal for a bounce, and then calls will be very inexpensive for some speculato calls. And that's kind of the game plan, at least for me today. I'll look to close my hedge puts out, depending on what the market does. If it can't find footing here, 535 or so, maybe I'll look to get some hedge puts into next week, maybe TZA calls, uh, or some kind of something to that effect, and then maybe look for some spec lotto calls for some bounces here today. After the close yesterday, Amazon disappointing. Apple, despite a slowdown, still beat. So they were hanging in there. Now Apple's even down. So it seems like the market it's going to be tough to see how things trade out today. Also, you take a look at the VIX, and the market wasn't down as much this morning before the jobs report came out, and the VIX was still over 20. So it's at 2024 highs. I mean, historically speaking, the VIX trades around 18 if you look over a 10 to 20 year period, even longer than that. So even up here at 20, I'm not saying this is like market crash levels, but it certainly means there's going to be increased volatility, and because of that, premiums are going to go up on the options, which makes it a little more difficult to trade. So that's kind of what I'm watching here. I would love to see the SPY back over 543 before the end of the day, or at least back over 542 and change for the 50-day moving average. It doesn't look likely. If that sets up, then we start looking at some of these June levels. And, we were 525 or so at the start of June. I'm not sure if we get there, but can't sit there and got to be open to possibilities. Otherwise, you're going to get stuck. And number one, not be able to take advantage of a move to the downside. And number two, maybe you're going to be loading up on calls or what have you. So that's that. Unfortunately, with the pullback, the small cap bull flag is almost going to be negated here at the open. IWM's down at 209, so substantially under the bull flag setup. And you take a look at the levels when we had that big move to the upside on the CPI numbers back in the middle of July. We gapped up to 209, so it's almost like we're gonna have a gap fill. Not the best kind of setup here. So I always use the IWM or even the Dow. The Dow has kind of been divergent with the S&P and the Nasdaq, so you can kind of have a silver lining. But then now you start looking at today, and it kind of takes the wind out of the sails of maybe a short-term bull case back to all-time highs. Nice report again for the Magnificent Seven. Great little slide here. I think this was from the Wall Street Journal. They were talking about the AI blowout. And if you take a look at the expenses, or at least the costs and spending from Microsoft, Amazon, Google, and Meta, just monstrous spending in regards to its AI, right? And that's some of the concern. Google sold off spending. You had concerns. I mean, you look at Microsoft and some of these other companies, they're spending billions and billions and billions of dollars on scaling out the AI. And with that, of course, that the who's going to benefit is going to be NVIDIA, AMD, Dell, some of these other names. But just pretty remarkable. So, is that a lot of that already baked in with all the AI names going on a run a couple months ago? A possibility, but just pretty remarkable, and I'm sure that trend continues. All right, so now some of the individual names, and I always talk about support levels and always be hedging ABH. That's kind of my slogan, especially with markets at highs. Doesn't mean we can't have pullbacks, and when you're in call positions, you can do one of two things: try and chase salvage the call position, or try and get some puts to offset that, or even more than offset that with profits. And so I typically choose the latter because you never know what someone, especially some of the names I'm in. There could be some cows, some buyouts, some analyst upgrades. So I typically just get put hedges, and that's what I did yesterday. So I was back in Broadcom puts. I did that on Monday, flipped them out for some profits, added them again yesterday. On the breaks of support on the SPY. It looks like right after 10 o'clock, the market was just selling off. I just don't want to be in a spot. I always say this, didn't want to have my pants down. So I went and got those, closed some out on a move lower for 100%, then another bunch for 300% as it tested 150. Once it broke 150, I closed the rest out, I think for like 500%, and they're going to open up probably 1,000% this morning, which, I can't cry over spilled milk. I had a plan. I want to be in a situation where I at least have some profits to end the week, and you'd never know. Intel was reporting after the close. I didn't want to be in a situation where they report a big beat and raise and all the chip names run. Of course, it was the opposite. So uh, it was a 50-50. And considering I already had profits, it made sense to lock those in. So I'm not going to cry over the spilled milk. But yeah, 148.50s. I mean, they'll probably open $9, so there'll be 20 bags at the open. But still made some nice profits there. I may revisit, but it's tough. I mean, you start looking at the chart, and it hit 142 or so on Tuesday. So is that the spot where maybe it finds some support right around here? I put it after Tuesday on Wednesday's watch list that I was going to look for some spec calls. Don't be surprised if the market finds footing and I get some spec calls on Broadcom. ServiceNow and Palo Alto. I put those on FinTwit. I posted in the chat room yesterday. The implied volatility or the implied move on both those names are extremely small, especially for names that trade in the hundreds, right? You take a look at a name like ServiceNow, and it had some great earnings last week, and the stock spiked from 740 or so all the way up to 8. What it hit 830, 840. Uh, I was looking yesterday for some other put hedges as the SPY was breaking 544. And I looked at ServiceNow. I said, wait a second, this is a $17 implied move. This stock's $800. We have, 36 hours till expiration. And then you start looking at the calls at 2%, less than a 2% implied move on the stock. So, I went and got those inexpensive, well, I wouldn't say inexpensive, but the 800s. I got some 800s. Then I added some 770s, locked some of the 800s in for over 100%. I'll lock the rest of the 800s here at the open. It's trading at 792. So those are going to be like $10. So those will be at least a 5 bagger. And then the 770s might pay here. And you start looking, I'm not saying it goes down to the 50-day moving average at 747, but maybe there's an opportunity it trades down to 780. If it does that before the noon hour, the 770s is going to be a nice multi-baggers as well. So that'll pay. And then Palo Alto, and I got the 300 strikes in similar situation. I'm looking at the 300 strikes were like 17 cents or 18 cents, and the stock was at 318. I'm like, what? Like, and of course, the market has to sell off, and Palo Alto has to sell off. Is a great name. CrowdStrike is coming under pressure, so people are piling into other security names that may benefit from large customers pulling their spend from them. But I looked, and it's like it won't even matter right now if the market pulls back. The rising tide raises all ships, and a lower tide lowers all ships. So I would not be surprised to see Palo Alto trade to 300 or so. I'll look to close some more of my puts out at the open and then just ride the rest. Again, because similarly, at some point we're going to have some kind of bounce. I don't know if it'll be midday, afternoon. It'll happen, and I don't want to be in a spot where all the premium, especially it's a Friday expiration day, and you're in options that expire the same day. The premiums will just get destroyed on any kind of bounce. So that's kind of what I'll have my finger on the trigger pretty quick here at the open. So that's that. So some of the long names I'm in, and fiber was great on Wednesday. Huge rally up nearly 20%. I locked some of the August strikes I got in for 100% to cover costs. I should have locked in the September calls in, or at least some of them to cover costs. They were up near 100% near the close yesterday, on Wednesday. And then sure enough, was it due? It pulls back over 10%. I don't know if some of it was Upwork. You also had Etsy selling off, which is kind of like a similar kind of platform in regards to Fiverr, right? It's a gig marketplace. So still love the name. If it holds ground here today and the market finds some footing, I'll look for some more strikes here on Fiverr. Still love the story. Oh, ENVX. I mean, I'm not going to talk too much about this. I've already said one day I'll do another rant on it, but it seems anytime I do a rant, I get a lot of negative feedback, and I think a lot of this is because there's people who have a strong position or strong vested interest in the stock going higher. But they had earnings after the close Wednesday, and you would think it was a great earnings report. They announced more deals, right? No deals with no names. It just MOUs, a car company. Then they also announced their cash position was great, but then you pull back the onion, and they did an at the money offering. Did not disclose any details besides in the little shareholder letter saying, "Oh, we raised $34 million." So you diluted shareholders. We don't know what the stock price was. We don't know how many shares it was. And then you start looking at the filings, and a lot of it's on FinTwit too. They had 156 million shares outstanding last year. Now they have 173 million shares outstanding. So they diluted shareholders over 10% over the past year. They don't have any revenues, and the revenues they do have is from their acquisition. But then they say our revenues are going to substantially increase in the back half of 2024. But then you listen to the conference call, and the CFO says, "Yeah, that's going to be mostly from our acquisition, and some of it from samples." But there's no breakdown of the revenues and the growth and the mark. It's anyway. So it's sitting here at $11. I still have the August puts. Don't be surprised if I add some more. Uh, you also look, and some posts on FinTwit, you have all these analysts upgrading the stock, and you look at an analyst like Canaccord, and what did Canaccord do? They did their $150 million stock offering last year. So of course they want to raise the price target on ENVX so that the next offering, ENVX knocks on their door and says, "Hey, do our next offering so you can collect the millions of dollars in fees." And you also have the other analyst, I forget who it was, Canaccord and Oppenheimer. Oppenheimer was the company responsible for doing the SPAC transaction for ENVX. They got like $100 million for doing that SPAC transaction. Of course, Oppenheimer's vested interest is to raise the price target on ENVX. Anyway, I can go on rants where I want too much, but don't be surprised. You look at the 200-day moving average is 1036, 1086. It breaks that. I think it trades under $10 today. Square, great earnings after the close yesterday. And then you have Dorsey he used to run Twitter, and I like to call it Square, but it's Block. Talked about trying to disrupt Bitcoin, right? To be the miner of choice. I mean, if he's able to execute on that, stock's going to trade multiples from where it is now. But of course, it just pulled back with the rest of the markets. It was in the green for most of the pre-market and after hours and pre-market. Now it's down here at 58 and change. There was a short piece. I don't know if it was Hindenburg. One of those folks came out with a short piece on Square a while back. I don't know if that's some of it weighing on it, but at some point, I'll look for some more strikes to play that one for upside. Roku, also after close yesterday, great quarter, beat and raise this morning, trading down with the rest of the market down here, $55. Mind-boggling to me, but I'll wait for the dust to settle on that one. And then last but not least is Western Digital. I put it on the watch list. To me, it's like uh, it's like a stock, a $90 stock in $60 clothing. They back when you used to think about Western Digital, you used to think it was I didn't even post a watch list here, so sorry. You used to think it was just a hard drive company, right? But they've transformed to the point where a lot of their revenue comes from the cloud. And I think it's like 40% or so. And their recent earnings, it was like 50%. So just it takes kind of the narrative that it's just a low margin hardware company out of the equation, and now it's a high margin cloud company that sells hard drives and storage and things like that. So, I can go on a rant for a while with WDC. I got some spec calls that was starting to bounce, and it sold off with the rest of the market. I'll continue to look for opportunities to play for upside. Not only that, it has a potential pincher when the ADX and the momentum indicators come together. It usually precedes a large move to the upside. So, of course, the market will have to bounce as well, or at least hold its ground for that to happen. But I really like WDC as well. And that's it, folks. I'll try and get on later. If the market's crazy, I'll be on at 12. If not, I'll be around 2 or 3. Let's have a great day, folks.